Welcome to this week's edition of Flashback Friday, your opportunity to get some good review by listening to episodes from the past that Jason has handpicked to help you today in the present and propel you into the future. Enjoy.
Welcome to Creating Wealth with Jason Hartman. During this program, Jason is going to tell you some really exciting things that you probably haven't thought of before and a new slant on investing. Fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 11 states and 17 cities. This program will help you follow in Jason's footsteps on the road to financial freedom. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to the Creating Wealth Show. This is your host, Jason Hartman. This is episode number 428. Thank you for joining me for episode 428. Today, our guest will be John Challenger, and we'll be talking about employment and different geographies and how that's laying out across the land. But first, of course, I have a few things for you. Number one, I keep forgetting to ask you, how do you like this publishing schedule we've been on recently? I'll call it the high-frequency publishing schedule because it relates to what we're going to talk about in the intro section about high-frequency trading again. There's some possible good news. Maybe the government is finally getting a clue and helping out us people, right? Maybe. We'll see. Yeah, we've been publishing every Monday, Wednesday, and Friday pretty darn consistently for a few months now, and I hope you like it. Judging from the ratings and the rankings, we have definitely seen that you seem to be liking it. So how do you like it? How do you like the frequent publishing schedule 3 days a week, every Monday, Wednesday, and Friday? We're going to try and keep that up. We've got so much material to get out to you, and we'll attempt to do that. So we'd love to hear your feedback, and we would love it if you would review us on iTunes or Stitcher Radio, and can do that real easily. It only takes a couple of minutes, and we would much appreciate that. So high-frequency trading, the American Renaissance, energy, a few of the things I want to talk to you about as it affects our real estate investing and our income property investing plans and portfolios here. So some really good stuff. So today I interviewed Consuelo Mack, and you may have heard of her. She has a show on PBS and puts out some really great material. And so I interviewed her for the show today. We'll have that on an upcoming episode soon. But one of the things we talked about is what she calls the American Renaissance. And certainly on the show in prior episodes, we've had a lot of negative stuff that we've talked about. We've talked about how to spin those negative events, which most people would interpret as negative, in positive ways and exploit them to profit and benefit as we invest in income property. One of the things that I talked about a lot during the Great Recession, our last financial crisis here, and the one we're probably still in, because I still don't think that from an economic perspective, we are really in a legitimate recovery. I think we're in a recovery induced by, on the good side, innovation and entrepreneurship. That's fantastic. But on the bad side, we're in a quote, recovery, unquote, induced by money creation, money printing, by Keynesian economics, which is never really the basis of a true, legitimate, fundamental economic recovery. With that said, there are many, many things to be very bullish about and very excited about in the future. And we've talked a lot about technology. We've talked about breakthroughs in energy and manufacturing in the way of 3D printing. Certainly, I've probably talked more than enough about the self-driving car, and you might be sick of hearing me talk about that. But I do think, folks, that is a biggie, okay? That is a biggie. Do not underestimate the importance of that good old self-driving car. I can hardly wait to buy one myself. We're getting close with that. In this American Renaissance, I mean, if you think about it, and you'll hear about it on the interview upcoming with Consuelo Mack, but there are so many amazing things going on, not the least of which is energy. And just a few days ago, an American company, Lockheed Martin, announced a big breakthrough in fusion energy technology. Okay, so, I've mixed this up on the show before when I wasn't thinking and didn't have enough coffee, but the way we get energy now in terms of nuclear power, and by the way, that's nuclear, not nuclear, George Bush and many others who mispronounce it. It's nuclear. Just look at the way it's spelled. And my mom used to always correct me on that one too. Glad she did. What we've always done is we split the atom, okay? And that generated heat. And that heat could be used to boil water and make steam and turn turbines. And, that is our popular form of nuclear power now, right? Well, there's another way to do it, and that's with fusion, putting the atoms together and having them create heat. And when we do that, it's vastly more efficient. It's much, much safer. And it's clean. It doesn't create any waste. Now, personally, I think the current method of nuclear power is the cleanest, safest, overall best form of energy available to us today. I think it's much better than coal and really any other system. I don't think solar or wind are even close to being there yet, although they have improved pretty dramatically. But I think the Obama clan is following the wrong thing there, and they're just using it as a way to engage in crony capitalism and restriction of freedom. We talked about that before, certainly. But, this is a big deal. So here's what Lockheed says. They say that within a decade, they will be able to put nuclear fusion reactors on pickup trucks. That's how small they will be. Portable, small, safe, and probably pretty inexpensive, too. And this is potentially a huge, huge game changer. And, it's so interesting to look back and just, if you want to see what people thought the world was going to turn out like, it's really quite fascinating to watch movies from the 70s. You could watch Soylent Green. You could watch, any of these other movies that predicted, what's that one where they, and this is not a 70s one, I think this is an 80s one. I forget the name, but, it's these people with no fuel and water and this like apocalyptic world, road warriors or something like that. Anyway, you probably know what I'm talking about, even though I don't know what I'm talking about. But, this whole future, this Malthusian future that they've predicted for, hundreds of years is just not coming true. Sorry for the giggle. My dog here is bugging me. Hey, Coco, you need to leave me alone while I podcast. By the way, you know who my best student is? It's Coco the dog, who listens to almost every single podcast I record.
Welcome to this week's edition of Flashback Friday, your opportunity to get some good review by listening to episodes from the past that Jason has handpicked to help you today in the present and propel you into the future. Enjoy.
She just dutifully sits here all day, learning, whether it be the Creating Wealth show, the American Monetary Association show, the Jet Setter show, the Holistic Survival show. She listens to almost all of them because she's with me almost always when I'm recording them. And you see, this is why I'm single, because a wife would be bored to death with this, right? But anyway, I digress as usual. So, the Malthusians have predicted this terrible apocalyptic future, right? And it just ain't happening. Every problem we encounter, we seem to overcome with bonuses. Necessity is the mother of invention. And with all of the amazing stuff going on in technology, it is just an incredible time to be alive. One of my friends today posted on Facebook a new app that basically, you can put it on your smartphone, and this app will tell you what beer or wine you will like best based on, get this, based on your DNA. Yes, everybody actually has, and this is the reason we all like different things, right? Because we are genetically diverse. And that genetic diversity actually tells us what we like in terms of taste. So instead of going with the description of the beer or the wine, what's the bouquet? What is this, an amber or a lager or this or that or a Hefeweizen or, whatever, or a stout. All these descriptions, they're somewhat meaningless because the real way we taste is based on our genetics. And now, get this, there's an app for that. So it is truly an amazing time to be alive. And by the way, last week when I was in Las Vegas at the conference on discounted mortgages and note investing and so forth, more to come on that, obviously. We've talked about that extensively as we're wading through the cheesy players in that industry and looking for the best outlets and the best local market specialist, if you will, compared to our property investing in the world of note and trusteed and discount mortgage investing. But when I was there with our client, Fernando, who finally came on the podcast for a very brief time, he told me about another awesome app, which I am really starting to use and love. And I don't know if this is on Android, but it's certainly on iPhone, and it's called Fooducate. Fooducate, in other words, like food and educate, right? And this is the most awesome food app I've ever seen. I think I'm getting a little bit of a disease here. It's the disease known as orthorexia. And I've teased two of my ex-girlfriends about it because I say they have orthorexia. And you can look it up. There's a Wikipedia entry on orthorexia. It's, I guess it has some of the same words as anorexia. Now, that would not be good. Orthorexia is actually a pretty good one as long as you're not too intense or insane about it. But maybe I've got a little touch of it myself. And what that is someone who is really into eating the right food. They really want to make sure the food's organic and they want to know about their food and all this kind of stuff. Now, look, I am not a nut about this. At least I don't think I am. But I guess nuts never think they're nuts, right? But, I do like to know more about it. And these labels are so confusing. What would appear healthy is really not healthy. And I think our FDA, our Food and Drug Administration, is really just part of the problem. They're part of the scam. They mandate labeling laws, and then the companies that are in bed with them, like Monsanto, and there's a lot on this on the Holistic Survival Show, by the way, many, many interviews on the topic, are, just like they're in bed with the big Wall Street companies. And these are both, right? The big food companies are the big Wall Street companies. So it's like two ways to be in bed with the government and the corporatocracy in one swoop. So you have them, and they mislead us so much with their labeling. And so this is a great little app. You can scan the barcode on any food item, and it'll give it a grade, and it'll tell you why it gave it that grade. So is it an A, B, or C, a plus, a minus? You can just see the thing you thought was good will turn out to be a C or a C plus. And then you can discover why. And it'll give you the recommended amount of grams of sugar you should ingest every day and things like that. So really great little app. Thank you, Fernando, for referring me to that one. I really, really like it. So anyway, that's that. Now, some good news from the government and the powers that be, maybe. They are finally, thank you to Michael Lewis, who we profiled on an episode, a couple dozen episodes ago. And we talked about his new book, Flash Boys, which, by the way, is an awesome book, okay? If you want to know about the lengths to which these Wall Street crooks will go to scam you, read Flash Boys or get it on Audible if you like audiobooks. But your listening time should be dedicated to my podcast, so never mind. Just read the book and listen to my podcast. That's a great book. And so he has really brought a lot of attention to the scam known as high-frequency trading. There's a little newsy video on that I want to share with you, and here it is.
In the world of high-speed trading, milliseconds can mean millions of dollars, and the FBI is concerned some traders might have an unfair advantage in that respect.
Really?
Firms often use high-speed computers and algorithms to trade at rates faster than individual investors. And while the practice itself is legal, the FBI is investigating whether it's being used in wire fraud or insider trading. The Wall Street Journal and Bloomberg broke news of the FBI probe Monday. High-speed traders are also the focus of Flash Boys, a new book from author Michael Lewis. And apparently the book portrays the practice rather harshly. In Businessweek's words, Lewis views high-speed traders as the consummate middlemen extracting unnecessary rents from a class of everyday investors who have never been at a bigger disadvantage. The criticism here is that firms engaging in high-speed trading can act on information before the average individual trader even knows that info, and that affects the price of the stock, though at least a couple members of CNBC's panel Monday afternoon didn't see why that's big news.
I don't know that the market is rigged, but just the reality of the world we live in today. I'm not saying this is right, but the reality is if you have money, you have more access. It's really that simple. That's the whole point of private client services.
A stat to keep in mind, despite strong market gains in the last couple of years, the percentage of Americans owning stock is at a 15-year low. So more trading is happening among a smaller slice of the population. The FBI won't be alone in its investigation of high-speed trading. The Securities and Exchange Commission and New York's Attorney General's office are also examining the practice for criminal activity or unfair advantages. For Newsy, I'm Zach Toombs.
Obviously, criminal activity and unfair advantages. Why isn't high-speed trading on Wall Street considered the same thing as insider trading? Because it really is. As Michael Lewis explained so well on 60 Minutes, we played the clip on my show as well. Basically what they're doing is you make the trade, and then they know you've executed that trade from your computer, and then they go and trade just milliseconds before you. So they're using insider information. It's not the same type of insider information where you know the CEO of the company and the CEO of the company gave you the insider information. That's what our insider trading laws are set up for now. This is just like a reverse form of insider trading. It's ridiculous and it's disgusting. So anyway, hopefully we'll see some action from the government there. But usually, you know how it is. I'm a pessimist about this, folks. Every time the government takes some action, it usually never solves the problem. In fact, so many times it actually causes the reverse effect and makes it worse. So we shall see as we continue to monitor the crackdown, the theoretical crackdown, or at least the investigation into high-speed trading, which is an abject scam. It's ridiculous. So stay out of Wall Street. Commandment number 3, thou shalt maintain control. Buy some income property for yourself. You know, it's the most historically proven asset class in American history, if not world history. Okay, I want to thank you to many people who have been helping me clear out my storage unit and sell those Creating Wealth home study courses and Meet the Masters home study courses. These are the physical products that are on sale at drastically reduced prices to be good ornaments on your bookshelf and also good knowledge inside your brain. And so thank you so much for buying these and helping me clear out that storage unit. I love it. Again, we don't do much in the way of physical products. Most of our products are digital, so you just download them. They're bits and bytes, really. And these are physical products, so we appreciate you getting them. We've got them on sale, closeout sale, to get rid of the last of these at jasonhartman.com. Basically half price, free shipping in the continental United States. And I see we got one here from Canada who snuck in. If it's not too much, we're going to ship it to you too, so don't worry. Okay, so thank you to Ken, Andrew, Joshua, Heath, Diana, and Jeremy who purchased those products, representing us from cities, and that's Parker, Colorado, Denver, Colorado, Woodbridge, Boulder, Aurora, Las Vegas. So a lot of good stuff, and we appreciate you purchasing those. And please, if you haven't done so yet before the closeout, take advantage of this ultra great deal just because I don't want to store these products. And let's get them out of there. And then make sure you join us for our Birmingham Creating Wealth in Today's Economy seminar and property tour. That's November 22nd and 23rd, the weekend before Thanksgiving. I think on Saturday evening. One of the great things about these tours, the thing I just love so much, is all the meals we share together. Last time in Little Rock, we had a pretty small group, only about, I think, 22 people, maybe 24 people, but we just enjoyed some great meals together, and it's just really great to be able to get to know everybody and talk about things and address issues and get questions answered and ideas exchanged at these meals. So I think, you know what, I think we're going to do Saturday night of the Little Rock tour. Since it's before Thanksgiving, I think we should go out and have a turkey dinner with all the trimmings, if you will. So I think we'll arrange that for Saturday evening on the property tour, the weekend, and so that'll be November 22nd. Will be Saturday, and then on Sunday the 23rd, we'll go tour properties in Birmingham, and this again is a fantastic market for what I call the bulletproof properties, the minimalist management. These properties, our provider there has a different style of things. They basically don't buy houses, and that means they don't sell houses, with very many features. These are really plain vanilla houses. And at first, when I was there a couple of months ago, I was asking them, well, why do you do that? If there's a dishwasher, you take it out. If there's a garbage disposal, you take it out. You try not to buy houses with garages. If there is a garage, you wall in the door and turn it into a storage room or an extra room. Why do you do this? And they said, because those are all the things that break. And we take them out, so there's nothing that breaks. So our investors really have very, very little maintenance at all. There's just, this is the minimalist management philosophy. In these houses, they're able to sell them to you at such low prices that you can rent them at very low prices, and they're very desirable to the tenants. In all of the properties there, we're basically seeing rent value ratios well above 1%, or in the worst case, at about 1%. Some really good properties in Birmingham. So come join us for that, and I really look forward to seeing you and hanging out with you. It's a nice casual environment. I do the seminar all day Saturday. We have lunch together on Saturday. We have dinner together Saturday evening. We'll have breakfast together on Sunday, and then lunch together on Sunday as well. We always have to take people after lunch to a good Starbucks run, so we always seem to find a Starbucks to do that because, I gotta have my iced coffee with 1 pump of vanilla and just a tiny little bit of soy milk in it, because soy is not good for you. I learned that from the Fooducate app. So there you go. Okay, hey, let's get to our guest today, John Challenger, and let's talk about outplacement, employment. What areas of the country and the world are having the good employment growth? And that's one thing we have to know as real estate investors, right? Because we got to know where the jobs are going. But here's a clue. And by the way, if you haven't listened to it, go back and find my podcast with Meredith Whitney, who is awesome. You've probably seen her in the various media and written in the Wall Street Journal, CNBC, etc. She wrote a great book called The State of the States, which addressed all of these business-friendly states and where the job growth is. And Consuelo Mack, who I interviewed today, and we'll publish that interview soon, she said something really interesting. She said, the Midwest is my favorite emerging market economy. And I thought that was kind of interesting. So, and really the South is the same thing. It's kind of the same deal. It's really all the same types of elements and demographics and things going on there and business friendliness. So that's where the growth is. I'll give you a clue, but John Challenger will tell you more. And let's get over to the John Challenger interview. Here we go. It's my pleasure to welcome John Challenger to the show. He is CEO of the employment and global outplacement firm Challenger, Gray & Christmas, and we're going to talk to him today about employment and what's going on there. John, welcome. How are you?
I am doing very well. Thanks so much for having me.
Yeah, it's good to have you, and you're coming to us from Chicago, correct?
I am. I'm sitting on the west edge of the loop, southwest edge of the loop on summer day.
Well, good stuff. Well, let's talk about the economy and what is going on out there. Certainly, for the past several years, there have been a lot of complaints about the employment picture, and I just wanted to get your perspective.
Well, we're much more optimistic about where the economy is now compared to where it was 5 years ago. The expansion now has been going on since the summer of 2009, but it's been a very slow digging out of that deep recession, and it was the hardest recession on the labor market since the Great Depression. So it's taken now nearly 5 years to get back to the level of total jobs we had before that recession started. We now have surpassed that. And with unemployment nationally at 6.2%, we're beginning to see some of the first signs of labor shortages appearing. Seems likely as we move forward over the next 2 to 3 years, the last big section of this period of expansion, we'll see unemployment continue to drop.
Mm-hmm. So when we're talking about this, I think it's important to kind of break it down and dice it up a little bit, because there's a lot of talk about underemployment, and then you've got different segments of the market, whether it's college-educated employment or it's labor-type employment, blue-collar type employment, and things like that. And then, of course, geography enters the picture when you get past age breakdowns and so forth. Tell us a little bit about your firm and what type of work you do.
We're an outplacement company. When companies let people go, today a severance package includes health insurance continuation and outplacement. So we help those people find jobs, get through their periods of unemployment, and it's a benefit that companies offer. We're seeing most of that downsizing now occur due to mergers and acquisitions. You don't see the big job cuts occurring because revenues are down like we saw during the recession.
Mm-hmm. Okay, well, that's good to hear. So I would assume then your type of clientele is companies with white-collar workers. Would that be correct or no?
No, it's both white-collar and blue-collar. We work with white-collar workers all the way up to executives, but companies close plants and operations, and we work with blue-collar workers and non-exempts as well.
What segments are you finding the labor shortages in?
Well, we're beginning to see labor shortages in some of the areas you might expect, like technology, programmers. Those in particular are in high demand. Companies' IT departments, as they change to new technologies, as we move from PCs to smartphones, as more and more business is done in the cloud, there's just great demand for high-quality programmers. We're also seeing real demand for engineers of all types, electrical, electronic, mechanical. So that's another high-demand field where companies are having a hard time finding people with the experience that they want. But we're also seeing it in some other areas, interesting areas. For example, there was an article recently in Detroit, which has the highest unemployment in the country right now for a major city of 9.2%. But they were talking about companies offering signing bonuses to accountants because they couldn't find, employers were unable to find enough accountants in the city. If you go to the oil patch, and that includes not just the Southwest, but up in the Dakotas and the Plains, we're seeing great demand for truckers, both long haul and in cities, jobs for electricians, plumbers, flow control operators, real shortages of workers there. And this is what happens when you see unemployment get to the level it's at now, which is just at the very beginning of some of these kinds of issues. 6.2% nationally. Most economists think that full employment is about 4.5% to 5%. When you get to that level, and we're not that far away from it, because remember, back in the recession, we were above 10%, so we've come a long way. When you get to that level, companies begin to find very difficult to find people with the skills they want, and that's a big issue in this country. There is a growing skills gap where companies have jobs open, but they can't seem to find people with the skills that they want to fill those jobs.
Well, of course, all the numbers that you're quoting are the official statistics, and there's some manipulation there, just like with inflation numbers, of course. But if we benchmark official to official, then we're okay for comparison purposes, at least. What skills are in really short supply? I kind of have a feeling you're going to say technical skills and high-tech areas, right?
That's certainly is the key. But remember, it's not just high-tech areas. It's also, plumbers and electricians. One big employer in Houston told me that they were paying plumbers and electricians and other trade, high-skilled trade people $75,000 a year and up, and they were having a hard time finding people. There was a recent survey out from the JOLTS survey at the Bureau of Labor Statistics that showed employers hired 4.8 million plus employees in June. That was up 4.4 million from a year ago, but there were still 2.5 million job openings at the end of the month.
I remember reading an article about that about 3 months ago, and it really amazed me, and it showed there's a lot of a debate about how college is so overpriced now, and it's amazing. I mean, there are so many jobs that really just don't require college and can be very lucrative, at least if we're talking about just a money standpoint of view. No question about it. And, of course, entrepreneurship's always there, too.
By the way, you know what it means, though, is it means that we don't want to direct all our children into colleges, but we need to have stronger support for technical schools, for vocational schools, for trades schools, and if we can build on programs that tie the local community colleges and trade schools to the local employers, so that those trade schools and community colleges are training people on the specific skills in that particular city, that local environment that the employers need, and they can certify them. I think will make a big impact on that skills gap, which is leaving a lot of people unemployed who might need to. But the improvement is really there. The number of for underemployed, which is called the U6 number, that includes not only people who are unemployed, that means you've only been looking in the last month, when you hear the unemployment rate, but also includes people who've looked in the last year. It includes people who are part-time but want full-time jobs. That number has dropped from 13.6% unemployment or underemployment to 12% in the last year. That's a big drop. The number of long-term unemployed people over 6 months out of work has dropped by 1 million, over 1 million people in the last year.
You know what I'm particularly interested in lately is the subject of robotics. I have friends out there who are thought leaders, or at least consider themselves to be, and they have a lot of commentary on this subject of robotics, and I'm very curious as to how it's going to impact the economy and just what your thoughts are on it. Really, we're kind of here. I mean, it has arrived. Within a year, maybe 2 years, we're going to see some real impact, I think, in terms of the self-driving car, like that's coming to reality, okay? I mean, we know it's been out there for several years in experimental stages, and transportation is a huge employer in many different forms, from taxi cabs to shuttles to truck drivers hauling goods, and robotics for all sorts of other things. Robotics to make your coffee, robotics to replace the worker at Starbucks, all these kinds of things. And many have predicted massive unemployment. They have predicted things that this affects 45% of the jobs out there. Of course, it's not going to be all of a sudden. With every technology throughout history, it has always ultimately made life better, and people have found alternate employment. Maybe it's not the highest and best use for people to be driving cars or shuttles or trucks.
Well, there you go. Now I'm with you. I'm not pessimistic about it.
Me neither, by the way.
Yeah, I mean, every era has new technology. People who built their lives, around work, the technology replaced, in that era were afraid that they'd no longer, when the automobile came around, that there'd no longer be bicycles and buggies and trolleys and horses. The whole economy built on that. Every era has technology like that, and yet what happens is people move, to new kinds of needs, professions. People use the technology to do more complex kind of work. And so I see no reason why this kind of era is any different. The technology is changing what people need to do. Will be doing this at work. It means they need more skills around how to use the technology, which is why education is so important. We may see people move to, we may see a huge growth in service jobs. I mean, think about all the doctors and nurses and healthcare providers, that are needed, and people who don't really get the health care they need of all kinds, elder care support people. Think of all the trainers and the coaches that are out there today, that aren't just coaching, athletes, but coaching people on mastering different kinds of endeavors in all kinds of fields through adulthood. So I think that can't be automated. And it can be, again, technology will impact. In fact, technology is going to impact colleges and how we train people.
And it should, by God.
But it doesn't change. Right? It doesn't slow down.
Yeah, the education industry really needs to be just disassembled and rebuilt because it is so overpriced. I mean, it's just in an era of technology when college kids are taking their classes online. I mean, why does the price of college keep going up? It's absurd. And the only real answer for that, and this is just a little tangential issue, is that the government keeps pumping money into insuring student loans. And so the universities naturally, they've got all this flow of money coming at them. They naturally raise their prices and provide less, not more services than they used to.
Well, you're so true. The slower a particular sector is to embrace technology and what it means for how they deliver their services or products or create them. The more of this kind of issue you have. The one I think is most hard to change is actually government, because business, even if it's healthcare, which is or education, which in some ways is a business. And it's supported by government, and so it's slower to change. Utilities are slower to change, but government doesn't, have the kind of change potential that business has. If a business isn't doing well, or a new business comes in, or provider of services comes in and uses technology to do it better and less expensively, eventually the companies that did it the old way fail. They either change or they fail, and people shift and people move in their jobs to the new area. But government doesn't have that ability. You don't see government go under, and so you don't have this potential for then new, more efficient, just more suited to the current technology and environment operations that can do government. So what you have is a proliferation of municipalities and city governments and townships and counties and state governments and federal governments because you don't have the ability, and they employ a lot of people. So I think that's the area which is the hardest actually to see a shift in.
Yeah, it's interesting. The thing about the robotics subject, though, is everybody always says, especially economists, the optimistic ones, this time it's different. Famous last words, right? But with the robotics issue and the technology we have nowadays, it really is a little different. At least I think so. You look at Watson, IBM's new doctor, basically. I was watching a presentation on Watson, the computer that won Jeopardy, by the way, a few years ago. And it's amazing how many mistakes doctors make and other healthcare professionals, yet the computer really wouldn't be susceptible to a lot of these mistakes. Now, I know there's a human element in everything. I get that. I don't know. If I was in the healthcare industry, I would be thinking about this. It's not tomorrow, but it's definitely coming.
But those robotics and computers, so they'll give us better healthcare.
Yeah, at lower cost.
Fewer errors, but they won't have bedside manner.
Well, true, but I don't know how much time the doctors nowadays have for bedside manner.
Well, maybe we'll free them up to do that, right? Instead of maybe that'll become more. The job of the doctor will be to take care of the sick Yeah,
and have the bedside manner. Yeah, well, the computer does the work of the robot. Yeah. And so nowadays, these robots, they learn things by watching you do them. I mean, they repair themselves to some extent. It's a pretty amazing time to be alive. I mean, like you, I'm optimistic about it. But I think the thing is that there's always a changeover period, John. You know, there's always that adjustment phase. And you see like these labor unions that want to use clipboards instead of computers, and you know they want to intentionally make the workplace more primitive so they can hang on to jobs that are just outmoded jobs. And that kind of stuff just has to end, right? Let technology do its thing.
You know, I think you're right. There's always a transition period. The transitions are hardest on the people, say, who are in their 50s and 60s, or maybe 40s, 50s, and 60s, who came up in the old environment, you know, but the new environment has come upon them, and their skill sets are no longer as valuable. And so the current example is manufacturing. In the 50s and 60s, it dominated our economy, but today it's somewhere, I believe it's 11% of the workforce, somewhere in that range, works in manufacturing, and it's because machines do much more of it. You just don't need as many people to operate. And think about how many more cars and washing machines and you know all the other sorts of things that manufacturers create that we need today. So you know they're making far more with far fewer people. The generation of people, you know, who were in their 50s and 60s, you know, can't really adapt, and all of a sudden wages, you know, for those semi-skilled jobs plummeted. Hard to make that adaptation. Many did not very easily, and that was some of the real pain and suffering and agony that the country went through, and those people and their families went through, and some towns and cities that were some of the big manufacturing hubs went through in the 80s and 90s and continued to go through. But they weren't asking, or those same people weren't putting their children, you know, through school to prepare them for manufacturing. They knew they had to go on to other kinds of skill sets, and that's what's happened is their children went to engineering and went to computers and technology and went into healthcare or energy, you know, just other areas of the economy that have thrived while manufacturing slowed down. We've moved from the manufacturing age into the information and service economy era, and that left always, you know, those kinds of changes leave some people stranded.
As we wrap up here, John, I want to ask you a little bit about geography now. Does your company does business all over the world or all over the U.S. or?
We do, yeah, all over the world.
All over the world. So what's going on? You know, maybe just talk a little bit about the U.S. at least. The world's too big a place to even get in here in a couple minutes. But what are some of the hot spots for jobs geographically? Are they the business-friendly states? I mean, Texas is obviously making a lot of news. What are you seeing?
Well, we are seeing, you know, many states now with low unemployment, you know, and some of those are in the Southwest, in the Plain states, you know, have some of the consistently lowest unemployment rates under 5 and even 4% in some cases, which is really full employment. The big cities, some of the cities that were hardest hit by the housing crisis, some of the states that were have the highest debt issues are the ones that are still struggling. But even those states, you know, are turning around. You know, states like Illinois and California and New Jersey and Florida and Arizona and Nevada. I mean, those are places that had very high unemployment. Their employment is still higher than the national average. But it's turning around.
So it's getting a little bit better in those places, you're saying?
Yeah, it is. And so one of the things you see as you move into, you know, this, as we move into this era of lower unemployment, again, say unemployment between 4.5% and 6.5% or 7%, but 6.5% and down, is that some of the most disadvantaged groups, the long-term unemployed, the over 55 workers, immigrants, people with high school educations, or even the ones with less than high school educations. Those are the ones that begin to get picked up as the labor pool shrinks. Hopefully they get new skills. Those jobs they work at make them more current to find better jobs. So we're moving with the onset of this next period in the economy, unless some very unusual event happens, where we'll see real improvement in some of the people who were hit hardest in the recession and have had really the hardest time making their way back into the economy.
Mm-hmm. Yeah, very interesting. Well, good stuff. Well, John, give out your website if you would, and tell people where they can find out more about your firm.
Website's www.challengergray.com. It's the right place to go to find information about us.
All right. Well, John Challenger, thank you so much for joining us today.
Thank you for having me.
I've never really thought of Jason as subversive, but I just found out that's what Wall Street considers him to be.
Really? Now, how is that possible at all?
Simple. Wall Street believes that real estate investors are dangerous to their schemes because the dirty truth about income property is that it actually works in real life.
I know. I mean, how many people do you know, not including insiders, who created wealth with stocks, bonds, and mutual funds? Those options are for people who only want to pretend they're getting ahead.
Stocks and other non-direct traded assets are a losing game for most people. The typical scenario is you make a little, you lose a little, and spin your wheels for decades.
That's because the corporate crooks running the stock and bond investing game will always see to it that they win. This means, unless you're one of them, you will not win.
And unluckily for Wall Street, Jason has a unique ability to make the everyday person understand investing the way it should be. He shows them a world where anything less than a 26% annual return is disappointing.
Yep, and that's why Jason offers a one-book set on creating wealth that comes with 20 digital download audios. He shows us how we can be excited about these scary times and exploit the incredible opportunities this present economy has afforded us.
We can pick local markets untouched by the economic downturn, exploit packaged commodities investing, and achieve exceptional returns safely and securely.
I like how he teaches you how to protect the equity in your home before it disappears and how to outsource your debt obligations to the government.
And this set of advanced strategies for wealth creation is being offered for only $197.
To get your Creating Wealth Encyclopedia Book 1, complete with over 20 hours of audio, go to jasonhartman.com/store.
If you want to be able to sit back and collect checks every month, just like a banker, Jason's Creating Wealth Encyclopedia series is for you. This show is produced by the Hartman Media Company, all rights reserved. For distribution or publication rights and media interviews, please visit www.hartmanmedia.com or email media@hartmanmedia.com. Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, or business professional for individualized advice. Opinions of guests are their own, and the host is acting on behalf of Platinum Properties Investor Network, Inc. exclusively.